Good afternoon. This is Rich Nelson with Allendale covering the wrap-up commodity comments. Today is Wednesday, April 20th, 2011. Of key interest, of course, we had a lot of excitement this morning. The fact that the U.S. dollar was down 65, in fact, 65 right now. It was down 90 to 90 cents or so here earlier on this morning. That certainly provided a lot of momentum for upward prices for grains as well as livestock. So a lot of excitement here based on that much weaker U.S. dollar. In fact, this is the lowest the U.S. dollar has been since November of 2009. So that certainly provided a lot of support. However, we didn't quite last up there. We've got corn down 17 3/4 on the May. December down 23 cents. So this is actually the lowest close on that May contract since March 31st. Quite a reversal here and quite a devastating blow to psychology here. It was also interesting to point out that the DEES actually went lower than that May contract. So we did see a little bit of reversal in that old crop, new crop spread from what's been going on in recent days. Key reason why we did see this decline here, the fact that at 10:30 the Department of Energy estimated that ethanol production last week fell, and it fell sharply. In the past 4 or 5 weeks, we ran ethanol production from 895,000 barrels per day to about 913,000 barrels per day. The new number for last week was 856,000. So quite a change when we've been running 900,000 pretty much on the dot since January 1st. So quite a change in psychology, and it's just as amazing how abrupt this number was. And we'll post a chart of that on our wrap-up comments tonight, so take a look at those in the corn commentary section here. So certainly that was one thing. Secondary issue, kind of a more minor one, the fact that some forecasts are suggesting the 11 to 15 day outlook may clear up a little bit for some corn planting. So we all know that corn planting will be delayed sharply through mid next week, but maybe the 11 to 15 day forecast may show some clearing. Soybeans did okay here. Up a little bit here for most of these markets. Some things we got to point out here, though, is we have some shifting. If we get the shifting out of back into corn acres, if it's able to get planted, then maybe beans won't see that extra acres pushed into them here. Also of interest here, we still have those concerns about China. The fact that there's still more reports that even after those cancellations and deferrals of cargoes from Brazil to China that were announced earlier this week, that there might be a few more in the next few weeks here. So that may keep this market kind of under wrapped and limited in terms of price movement. Over on the wheat, kind of mixed action. Chicago up 1 1/4. KC down about 3 3/4. At this point here, we're not going to look at this being a whole lot of interesting news here. The main thing for the wheat is we are watching these KC Chicago spreads and Minneapolis Chicago spreads. So selling the Chicago, which has been getting rain, and buying the KC based on the drought, or the Minneapolis based on the lack of planting going on in the far up north. Over on the cattle, down 55 cents. Quite a reversal day for cattle. They started out much stronger here today based on that sharply lower U.S. dollar, but in fact we're down sharply at one point down $1.50, a little more than that here. Of key interest was the fact that the Newswire started talking about this animal cruelty video. A company called E6 Cattle Company out of Hart, Texas. What they do is they develop dairy calves. They just do a development program here for them and sell them to dairy companies, or say dairy farms, as heifers ready to go. One thing about this is this cruelty video may be thought of, maybe it's going to turn off some demand here for the short term for beef. So that's what's brought them back down here today. As far as near-term fundamentals, we're waiting on cash cattle to move. Last week was 119. They're talking like that may move here as well here. Over on the hogs here, down 45 cents for the nearby contract, or say the June contract. Cash hogs were steady to 50 cents lower today. This makes about 3 days in a row of kind of mixed to slightly lower trade here for cash hogs. So it's not a big topping formation. It's not any big major news, but we have to point out this may act as a little drag on some of these bullish expectations. For key reports we have out. Thursday afternoon, we have got 2 reports out. Monthly cattle on feed, which we have a preview of. We did a little webinar. You can find that on our website. So that is a monthly cattle on feed out at 2 o'clock. Second thing is the monthly cold storage report. And for this cold storage report, we will be watching closely whether the combined meats, So chicken, beef, and pork to see whether those declined again. That would be the second month in a row. That might actually imply that this market is starting to clean up some of this oversupply that's left in these warehouses. So a lot of neat things going on here. We've got no trade on Friday. We've got 2 reports out Thursday afternoon. Keep in contact with Allendale. Check your research and also call your broker. See what's going on in the markets and see what kind of things we need to move here. If you have any questions, give us a call here at Allendale, 1-800-262-7538. This is Rich Nelson. Have a good trade today and a good trading week.